Hello everyone, my name is Clément Gignac, Senior VP and Chief Economist for IA Financial Group. Over the next 5 to 7 minutes, I will try to summarize the special webinar that we have just recorded for our clients and for our advisor. So the title is in fact Coronavirus, high market turmoil, have we to expect a recession here? So you know what? You know me for many years now. I'm an optimistic guy by nature. You remember 15 months ago when the market has declined in fall 2018 by 15-20%. I mentioned at the end of the 2018, early 2019. Make no mistake, I do not see any recession, and it's a good buying opportunity. This time I'm much more nuanced because this is a completely different environment. This market drop is nothing related to interest rate. It's related to coronavirus. I'm not a specialist on that, but what I know is in fact, the World Organization has just declared a pandemic situation. What that means is beyond China, beyond Italy, it's around the globe. And using the past as a guide, that means that you'll take many months before you have a vaccine available. So make no mistake, the fatality rate is pretty low. So if you have less than 50, 60 years old, the probability to be affected by that is limited, but it's more important when you have more 60, 70, 80 years old. So no complacency on my side, but this slowdown that we have on the decline of the stock market and the slowdown that could create on the economy, because we have in the global village, China now represents 20% of the world economy, no longer 4 or 5% like 15 years ago when you have the SARS. In addition, the tourism is much more important, and now they will have a deceleration because people postpone their project to have a cruise and maybe postpone to have a trip in Europe or somewhere else. So in situation that create a slowdown. So in fact, you cannot exclude now that you will have a contraction. I will call that a shallow recession, but a shallow recession, in fact, it will be limited, but you cannot exclude that you will have a contraction of the economy for 3, 4, or even 6 months. So, but it will be in V shape, because as soon you find the vaccine, it will be available with all the central banks rate cuts, plus the government who will have some fuel the economy with the fiscal measure, liquidity available, that will rebound the economy. So on the stock market, but on the Canadian economy, we have another headwind in addition to the coronavirus I have to talk about. Is this decision, like a game changer, from Russia and Saudi Arabia to decide to increase their market share, and this is an oil price war. And that matters a lot for Alberta, and that affects the Canadian economy, because if suddenly you have to work with $25-30 as an average for this year, rather than $50, that make a difference, because Canada is the only G7 country who are net exporter of natural resource. So in such situation, if you combine that with less tourism and less trade due to the slowdown of the economy, it look like a little perfect storm, I will say, to affect the economy. Any sign of hope? Of course, because Canada public finance is the best in the G7. So we have seen already Premier Trudeau, who had just announced some measure to be sure that the Canada will not fall in the recession. But they are this is just a first step. I expect that in the next federal budget, you will have much more measure to be sure that will not fall in recession. But make no mistake, you will have a huge deceleration of the Canadian economy as well, and that could affect the Canadian dollar. On the market, this is something that I've never seen. We have seen so much volatility. In just few days, you have the feeling that you shift from a nice trip on the beach with the sun, and suddenly you are under hurricane, okay? So it's very bizarre. This is some things that I don't know if due to the algorithm, is it due to the hedge fund, the quant model, but this is a different environment than what I've seen in the past. So that means that we have to be prepared, and now we have to deal with more volatility than in the past. So since it's not the first time that we have a correction, you know what? We have seen 33 correction, 10% plus since the Second War. and 1/3 of the time they turn as a recession. The good news is 2/3 of the time you have no recession, and it's a nice rebound, it's a nice buying opportunity. But this time is much more tricky. It's not, the slowdown is not related to the previous interest rate hike, it's related to coronavirus, plus the decision of Saudi Arabia and Russia to have a oil price war. So this is something that affects oil sands, affects the shale oil. So in such a situation, I invite you to be, if you are in the stock market, you really need to have a 2, 3, 4 years time horizon, not 2, 3 months horizon, because nobody, including myself, have a crystal ball to know if the bottom is reached. You cannot exclude that we can have maybe a bear market, a small bear market, minus 20, minus 25, minus 30. But it's very important that our policymaker, the G20 policymaker, sit together like they have done in 2008 when I have the privilege to represent my country, Canada, on the G20. It's just the G20 go together and have in fact consistency, and they have a huge bullet to stimulate the economy. So it's not the case yet. More important or more disturbing, in US this is a presidential election year. So is it possible Democrats will in fact work hand in hand with Mr. Trump to stimulate the economy, or it will be fighting? Because if we lose our time with politics in US, make no mistake, it will be very tough. And in addition, the healthcare is not public like Canada, it's more private. So it's tricky a little bit what's going on. So that's the reason I suggest to conclude, it's time not to try to be the hero, not to try to predict the bottom is reached, because if you are in the equity market, stock market, it's not because you want to change your car in 6 months or you want to buy a new condo a year from now. It's because it's your retirement, you have a longer time horizon. No doubt that you will see the sun rise again, but it's just that we have to be ready, that we have to deal with some volatility and uncharted territory with this coronavirus. So that's my recommendation, just to think about that and about your time horizon, your risk tolerance. If you have difficulty to deal with some volatility, maybe you can scale down a little bit your equities. In our case, what we have done, we have scaled down our exposure to US market because they have performed so well in the last decade, and we have increased a little bit our exposure to emerging market. Why? Because China has been the first to be hit by coronavirus. It will be the first to get out of it. And this is with 2-3 months lag. That's the reason, for example, we have increased our exposure to emerging market. So this is basically my recommendation, that you have to take your time to consider, because in fact we have a different environment right now. So in such a condition, discuss with your financial advisor. If you have a difficulty to sleep with what's going on, scale down a little bit equities, but remember, this is a nice opportunity, this kind of environment, to build a nice portfolio for anybody who have a 3 to 5 years time horizon, because this is more a V shape. And as soon the confidence will be found from policymaker, or as soon we find a vaccine, the market will rebound and people will enjoy if they have, in fact, stay in the stock market. The worst thing would be to sell everything and go cash, because you will regret your decision. So this is basically the summary. The document, it will be available as well. I invite you to read the PDF. So thank you for your business and food for thought. Have a good day.